Hi guys, welcome back to Kaya Plus. My name is JP, together with me is Chumbing. So I think we are going to continue talking about ways to fight potential recession or even the inflation that we're currently into right now. And one special angle that you can actually do is actually to consider some of the sin stocks here in Malaysia. Particularly why it's because the predictability of these companies in giving out dividends, and you would also later understand why some of the elements of within the company can help you, or can even help the company to pass on inflationary risk, or inflationary costs down to the customers. We will actually also deep dive into that as well. But of course, today's we'll be focusing more on sin stocks. And of course, this is just our personal opinion. Does not constrain you to make any decision, buy, call, or sell whenever you go through this sharing session by us today. So of course, in the realms of sin stocks, there are many companies, but if you want to categorize into subcategories, mainly it will be just companies within the alcoholic brewery business, your tobacco business, and also your gambling or gambling related stocks. So of course today we will just be focusing on the first two, which is alcoholic beverages and also tobacco. But if you really want us to cover gambling stocks, you can let us know in the comment section, and if there is enough views on this video and enough comments to actually ask us to deep dive into gambling stocks within Malaysia or maybe also in Singapore, we will gladly do so as well. So let's zoom into the focus of today, which is alcoholic beverages. You have two key choices. I'll pass on to Jumping. What would be the so-called background or the so-called big data within the Malaysia alcoholic brewery business?
Yeah, I think the reason why we zoom into alcoholic brewery stocks is because some of the key characteristics, even during recession, this type of company pretty much they can be quite stable. And then we'll cover why, and also covering about their business model, so on and so forth. But of course, before that, we will give you some sort of fact check. I mean, like it or not, throughout the years, Malaysia alcohol consumption demand is actually increasing year on year, not restricted to just beer, but to liquor, soda, and so forth. So these are some of the factors supporting this stock, regardless of good time or bad time, technically speaking. And then, of course, within the stock itself, even though there are a lot of excise duty being imposed, the demand still there. So these are some of the historical data that showing within Malaysia when it's a few time of a huge price hike due to excise duties, right? So other than that, so we should take a step back and understand why we think this kind of company can be quite stable from a business model perspective. So you can see within the chart that we show here is basically a chart that actually we extract from the Heineken Malaysia Berhad annual reports. So this is a very good view to give you understand how they actually operate the business. So from the raw material go to brewing process. Once they are done with the brewing, they go for the packaging, distribution, go to end customer, and of course go to community for people to enjoy the beer. End to end is basically owned by the company itself. So when we say end to end, meaning they're covering from the upstream to downstream, they pretty much have some sort of pricing control because they control almost every single part within the change. So this is a very important characteristics for a stable business, which is something that we need during recession. Because recession itself, people might be scared, people might not be actually spending. But for company that's having the good pricing power, they typically can stay even though the situation might be choppy, the share market might be going up and down, but all in all, the business remain kind of stable. And of course, sin stock, for me, is between the things like your needs, which is something like your food, so on and so forth, versus something that you want. For example, the luxury items, buying games, buying luxuries, bags, so on and so forth. So they're somewhat in between. So that's why during recession, the need or the demand will be still there. That's why it's important for us to actually look into this type of industry. And of course, within Malaysia, it's kind of like a duopoly, meaning it monopolized by these two companies alone. Like it or not, majority of the beer or the liquor is supplied by these two companies. So it's Carlsberg Malaysia and also Heineken Malaysia. And then this gives them the very good position into distribution, setting the pricing, so on and so forth. And of course, the second thing that actually you should look into it is when you look inside the ownership of these two companies, be it Carlsberg Malaysia or Heineken Berhad, you will see the top owner or the top shareholder that typically own about 50% and above is the mother company that sit elsewhere. So for example, Carlsberg will be actually owned by the company elsewhere, which is 51%. Same goes to Heineken. Why is this important? Is because with this in place, the mother company will give some sort of pressure to the local company like Carlsberg Malaysia to basically redistribute back all the earning in the form of dividend back to them. On the other hand, if you are the shareholder, of course, when they are actually obligated to give a lot of dividends, you will be part of it. That's why this comes into the second characteristics of the sin stock that we think is kind of important during recession is they give a lot of dividend in terms of their historical performance. And of course, then you ask between these two, what is really the better one? So of course, if you want to talk about which one is better, you need to see from multiple angles. Business model wise, they are pretty much the same. But within product, like it or not, it's also kind of pretty much the same. They got the beer equivalent, they got the Guinness equivalent, they even got like those so-called alcohol zero kind of drinks. They also got the product one-to-one. So in terms of products, they are almost the same, offering one-to-one. Every single category, they got the same offering with just different brand or different name. But fundamentally, they are some sort of different. We call it as a key highlight. So for Carlsberg Malaysia, they are having present not only in Malaysia and Singapore, they also own a brewery company called Lion Brewery in Sri Lanka. So this is also some of the important that actually give you the view that Carlsberg is actually having the presence beyond Malaysia. On the other hand, Heineken, the key highlight is basically they own this so-called e-commerce platform called Dunkies. It's basically a platform allowed you to actually buy beers on demand and then they will deliver to you within the same days. So this is a few key highlight from the two companies. But of course, other than that, it's about their performance. So we also basically gather some sort of like a head-to-head comparison covering the few key financial inputs to let you actually see side by side. So of course, within the revenue, they are about the same. Heineken on the slightly upside. This is actually the 2021 statistics. And operating profit itself, Heineken also the better one. So you can see in a very high level view, Heineken seems to be slightly better from the revenue, the operating margin, down to dividends or even the dividend use. But of course, from the business perspective, they are kind of the same. That's why you can see they always hovering about the same movement. It just sometimes once another, sometimes Carlsberg is better or Heineken is better. So this is from a historical point of view. But what happened with the latest result? I pass to Jupan to give a little bit view on the first half of 2022.
I think when you look at the first half performance of both Carlsberg Malaysia and Heineken, you would be surprised to see that both actually saw double-digit recovery or growth, but that is due to the recovery that they are actually recording against a lower base number back in 2021, right? So back then, if you guys remember, during the MCO period of time, the breweries were actually not allowed to operate, so giving them very historical. I would say close to historical low revenues during time period, and now everything's back to normal. Business back to normal, and then when they actually posted the results on a comparison basis, you see that actually both of them actually hit a growth of 64% and also 84% respectively. But do bear that in mind actually, because it's a recovery comparison against last quarter. But apart from that, I think if you look at the other aspects as well, like your net profit, your profit after tax as well, you will see that it also went up by close to 3 digits, right? Both of the companies also doing it 3 digit recovery, and I think there isn't something much to be excited apart from the recovery is really coming inside the numbers. But this actually shows that when economy recovers, when there is a normal consumption pattern going on, even your discretionary kind of FMCG companies like your breweries, they also will actually show the same recovery trend as everyone else inside the recovery play kind of stocks. So this is basically the latest results. So of course, if you look at historical returns for the two companies, there was a period of time, I think, where all two companies actually hit around $30, right? I'm 30 plus per share, and after that they came down, mostly due to the pandemic. But now that you see they are slowly recovering, and then they have also increased and resumed their dividend payouts. So probably it will be a matter of time where you probably will see the price of both breweries going back up to $30, because they have been paying out close to 100% of the dividends. And if you do the maths, if they do pay back the historical dividend payout, even by buying the stock at $30 a share, you're actually going to get around 4% plus of dividend yield. Right, and why relatively, if you compare brewery stocks, tobacco stocks, and also your gambling stocks, even though inflation is a risk to every company out there, but the very fact that operating inside a FMCG company means that, first of all, your business model is going to be stable. Good times, bad times, people still need to eat or drink. And even though one of the key materials of brewing a beer, it's barley, right? It's made of barley. So barley prices can actually impact the input cost of a beer brewery business. But you can see that throughout the years, barley prices have gone up and down. It's very volatile in some periods of time. But the fact is that whenever prices are high, if the company cannot absorb it, they'll actually pass it on to the customers. And I think Chun Ping can actually vouch that prices of beer in Malaysia has just gone up one notch higher because of the inflation. So this is something that probably other business model that we'll talk about later might not have the benefit or the advantage. Right. So probably among the three categories that we talked about just now, we might not be so positive on tobacco, but we have shown you why brew business can be a little bit more exciting and much more prospective. But Chun Ping, just to maybe educate our viewers, why not tobacco stocks, but particularly tobacco stocks in Malaysia?
Yeah, so I think beside talking about the needs, even though during bad time people still smoke or whatnot, like it or not, e-cigarette actually give a lot of challenges to the traditional guys. Not talk about others that is coming in the illegal routes. So these two, the illegal cigarette is always the one that actually impacting the business, but when e-cigarette is in, it actually damage them further. And then the latest development is basically the Minister of Health in Malaysia, Khairi Jamaluddin, actually have this so-called generational endgame being tabled out inside Parliament. So what does this generational endgame means? Is basically a plan to basically restrict certain kids. So in some of the proposal is people that born or 2007, after they reach the legal age 18, they are no longer allowed to actually purchase tobacco products, meaning they are restricted or prohibited from smoking, even though they reach the legal age. But of course, this is still the plan, haven't go through. That's why all this anger that come in that make tobacco product is definitely not an company that you wanted to look into it. So, for example, we have one representative in the Bursa market, which is BAT, British American Tobaccos. You can see all these things basically being reflected in their share price, even though you can see one of the attractive one is they have low PE, dividend yield is very, very high, but don't get into this kind of trap. So dividend yield is kind of like a relative kind of calculation. So when your share price is low, of course, it's based on historical dividend payout. The dividend yield may go higher and higher when the share price actually drop. So that's why don't just purely looking at this kind of number. You should also take a step back and think about it. That's why we will not go recommend you guys to go for tobacco product from our personal view. And then, of course, if you guys are interested in gambling product, to let us know in the comment section. We'll cover in the others video upcoming futures. But of course, maybe Chupan, you can share with the viewer what is the offering that we have.
Yeah, so just by simply comparing tobacco industry in Malaysia and also the brewery business in Malaysia, straight on you can see that there's a little bit of insight where you guys can actually really dig down deeper to analyze and pick one particular company that is interested to you for you to hedge whatever risk that may come in your way in terms of an investing point of view. And all of this actually is just part of what we are sharing to you guys inside our systematic blueprint, which we call Dividend Gems. We have a solid blueprint and checklist to help everyone invest safely and pick the right dividend stocks by doing all the filtering and due diligence so that you don't pick a stock in the likes of BAT because the business model is being disrupted. And apart from that, the dividend yield might be a trap because you are actually going to be buying a stock where the prices go down faster than the dividend drop. So this is all going to be covered inside our flagship product. So apart from that, we do also publish a selection of stocks where we try to beat the market with this stock selection. So of course, back then in 2021, our Stock Plus series actually managed to achieve 24.5%, which is quite in line with the global market performances, right? So of course, if you're interested, you can actually head down to the caption below, link in the description to study and know more about Premium Club. And also we do cover some thematic related sharing as well. So we have done plenty of them. You can see them right here. And yeah, last but not least, to round things up, probably I would also ask you guys to probably share the video to your friends and family, and then subscribe to the video. Give us a like, a thumbs up, and also turn off the notification bell so that you get notified whenever we share similar videos in the future. Anything on your side, Chun Bing, to top up before we end the video?
Yeah, I think it's always good to actually analyze the business from a fundamental standpoint, especially during that time. So whatever penny stock or whatnot that can be news driven or whatnot, it's very hard to achieve the kind of similar performance like what you managed to actually do 2-3 years ago. So all these kind of thing will be gone. Now it's all about profitability, it's all about business model. That's why it's important to analyze from a fundamental perspective. And we do provide and we do believe in this kind of fundamental analysis. Join us in the Premium Club. You will find out how we actually analyze those stocks and give you some of the insight with figures and facts on a monthly basis.
Yep,
I think that's all from us.
about it. Yeah, we'll see you in the next video. Take care. Bye bye.